Assalamualaikum and good day everyone. Today I will be introducing my group, that is group 24. We got company RHB Bank Berhad and UMW Holding Berhad, and I will be introducing my group member, that is me, Asalidi Kasmini, and second Sharifa Adib Fikriya, third Akmal Nabila, fourth Gayatri, five Nur Adila, six Zhao Baukian, and the last Zhu Ying Hao. Next, this is the formula that we are using during calculation of these two company.
Assalamualaikum warahmatullahi wabarakatuh. My name is Akmal Nabila binti Azman and I did the raw data collection for RHB Bank Berhad and UMW Holdings Berhad. RHB is one of the largest financial services group in Malaysia. Meanwhile, UMW is a Malaysia-based investment holding company that operates through automotive, equipment, manufacturing and engineering. Based on the datasheet shown in the Excel, the restatement year for RHB Bank Berhad is 2015, while for UMW Holdings Berhad is 2016. The information for inventory and total number of employees are not stated in the report of RHB Bank Berhad. Meanwhile, the information for share price and total number of employees are not stated in the report of UMW Holdings Berhad.
Let's talk about the results of trend. The higher current ratio of UMW indicates that its assets are highly liquid and its short-term solvency is strong. And UMW's higher accounts receivable turnover indicates that it has a shorter average collection period, less bad debt losses, faster assist flow, and stronger debt repayment ability. And the UMW has a higher assist turnover ratio, which means it has a higher turnover rate and stronger operating capacity. And RHB has a higher debt ratio, suggesting it faces greater financial risk but is better able to generate profits. And RHB's higher debit to equal ratio indicates that its debit capital is higher in the total capital of the audited entity, and its protection of debit capital is weaker. And RHB's higher net profits margin reflects its higher operating efficiency, and UMW's higher times interest earned means its higher recognized income according to the date of interest payable by the debtor as agreed in the contract. And RHB's return on assets is more stable, while UMW's return on asset is more volatile, indicating that RHB's profitability is relatively stable, while UMW's is relatively volatile. And RHB's return on equity to recent years is relatively stable and higher than UMW in most of the time, indicating that RHB does not have a higher UMW in terms of market competitiveness and in the long term, and provides higher investment returns to investors. And RHB's earnings per share are higher and more stable than UMW's over the long term. suggesting it is more profitable and the cost of capital for retail investors to buy into the stock is higher.
My name is Akmal Nabila binti Azman, and I will explain the types of ratios analysis. The first type is profitability ratio, which compares income statement accounts and categories to show a company's ability to generate profits from its operations. This ratio focuses on companies' return on investment in inventory and other assets, which basically show how well companies can achieve profits from their operations. Next is liquidity ratios that analyze the ability of a company to pay off both its current liabilities as they become due and their long-term liabilities as they become current. This ratio shows the cash levels of a company and their ability to turn other assets into cash to pay off liabilities and current obligations. The third type is solvency ratio, or also known as leverage ratio. This ratio measures a company's ability to sustain operations indefinitely by comparing debt levels with equity, assets, and earnings. In other words, solvency ratios identify going concern issues and a firm's ability to pay its bills in the long term, and show a company's ability to make payments and pay off its long-term obligations to creditors. The last one is efficiency ratio, or also known as activity ratio, that measures how well companies utilize their assets to generate income. Efficiency ratios look at the time it takes for companies to collect cash from customers or the time it takes for companies to convert inventory into sales. These ratios are used by management to help improve the company, and investors and also creditors always look at the operations of profitability of the company.
For the next section, I, Nur Adila, will be presenting about which company appears to be a stronger candidate financially. To evaluate the financial condition generally for RHB Bank Berhad and UMW Holdings Berhad, we are going to observe ratio analysis that we have done. We are going to prioritize 8 most important financial ratio analysis. First, return on assets ratio. RHB Bank Berhad's ratio have been consistent for the whole 6 years, while for UMW Holdings Berhad just getting higher on the latest 3 years. The second ratio, return on equity. RHB Bank Berhad is higher and have been consistent for the whole 6 years compared to UMW Holdings Berhad. For earnings per share ratio and net profit margin ratio, RHB Bank Berhad have been higher and stronger compared to UMW Holdings Berhad. Next, let's look at the other 4 ratio. For current ratio and time interest earned, RHB Bank Berhad have been lower than UMW Holdings Berhad. However, for debt ratio and debt to equity ratio, RHB Bank Berhad have been higher and significantly stronger than UMW Holdings Berhad. So that is all we are going to observe for ratio analysis in graphic visual. How we are going to conclude which company is stronger financially. Hence, let's look at this table provided to summarize the overall analysis for RHB Bank Berhad and UMW Holdings Berhad. We can see RHB Bank Berhad comes out stronger and stable financially compared to UMW Holdings Berhad. Therefore, we have come to our conclusion that RHB Bank Berhad is stronger financially based on the ratio analysis that we have done.
A good day to Dr. Sarini and friends. I'm Gayatri, metric number 128196, would like to present on the third question of task 2, which is Besides historical financial performance as reported in the financial statements of the two companies, what else would your group take into consideration in making the investment decision? As a future investor, my group has a few concerns or expectations, namely, resilient revenue growth and cost management, asset quality and management of credit risk, approach to and progress in sustainability or ESG, which includes climate-related risks, ethical and responsible business practices, corporate governance, dividend payout, measures to mitigate effects of the pandemic, and financial assistance available to customers and impact on the group's profitability. Well, a few of RHB's response to concerns or expectations are emphasizing cost management as well as liquidity and capital management to support growth, putting in place strong corporate governance policies and ensuring adequate board oversight, putting in place a robust sustainability framework with action plans to drive the group's sustainability agenda and integrate ESG matters into the group's core business and operations, ensuring business continuity, the health and safety of employees, and continuous support to customers during these difficult times, ensuring the group's readiness in responding to the impact of the economic slowdown, such as by digitalization of customer journeys, transforming credit risk management, and readying the workforce for the future, providing support to customers through moratorium and payment assistance programs. Last but not least, remaining prudent and continuing to set aside preemptive provisions to cater for potential adverse impacts onto asset quality. On the other hand, a few of UMW's response to concerns or expectations are the group is taking a two-pronged approach to mitigate the impact of COVID-19 by ensuring sufficient revenue support and undertaking cost reduction and optimization initiatives. Introduction of new models offering innovative financing packages, expansion of sales network via e-commerce. The group continued to deliver products and services to customers throughout the year in a safe manner. Implemented various initiatives via digital marketing such as online campaigns and rebates to reinforce sales and attract customers. Conducted community engagement on environmental stewardship. Implemented energy and waste management initiatives to mitigate risks. Last but not least, strengthens the governance of the enterprise risk management framework and various policies and processes for efficient implementation of EES programs and initiatives. That's all from me. Thank you.
Assalamualaikum and hi, I am Sharifah Adifikra binti Said Muhammad and I will be presenting about what company that we recommended. So based on the ratio analysis, both companies have shows up and down over the year of 2015 until 2020. Then, we can conclude that UMW Holdings Berhad has better performance than RHB Bank Berhad. Thus, we recommended UMW Holdings Berhad. The reasons why we recommended this company is firstly, it has high liquidity that shows better financial performance where, in the ratio analysis, the current ratio is kept between 1.00 to 2.00, which means the company has more asset than liabilities to cover its debt. Secondly, UMW Holdings Berhad also has low debt ratio, where it has more asset than debt. Lower debt ratio usually implies a more stable business with the potential of longevity because a company with lower ratio also has lower overall debt. Subsequently, UMW Holdings Berhad has high asset turnover ratio. The higher the asset turnover ratio, the more efficient a company is at generating revenue from its asset. Last but not least, UMW Holdings Berhad also has low debt to equity ratio, which provide low risk for the shareholders. And that is all from me for the reasons why we recommended UMW Holdings Berhad. Thank you.
Hi, Doctor. My name is Xun Hao. I'm going to present future outlook of recommended company. Firstly, for customer, continue to bring out innovative products and solutions to keep our competitive position while using technology to further enhance customer service. Secondly, the group is fully focused on effectively managing all of our relationships across the entire stakeholder ecosystem, which is essential to the group's future success. Next one is sustainability. Besides ensuring the financial sustainability of our business, the group will apply the most relevant strategies to make a positive influence on the environment and the communities in which we do business. The next one is teamwork. A common corporate culture with a strong team spirit will eventually lead to the continued success and sustainable